Cottons, we've had a lot of questions about MTD, or Making Tax Digital. So we're sitting down with Jo Surley, our tax director, to answer some of them.
So what is MTD, or Making Tax Digital?
So Making Tax Digital is effectively HMRC modernising their systems and the government trying to fill the tax gap. It was first mentioned back in 2015, so there's been a long road to get here. And it consists of three elements, so digital records, quarterly filings, and then a year-end declaration. And that is going to be applying to the self-employed and landlords in the near future.
And so when will it be introduced? I know it's been mentioned before, but is it really happening this time?
Yes, we believe it is happening this time, that the government set out their intent in the budget to say that they were keen to keep the timeline. So it should be introduced from April 2026. Will be the first tranche of people going into it. So that's Making Tax Digital for income tax. And that will be those with self-employed on property, combined income over 50,000. And then it will be expanded in April 2027 for those with combined property and business and self-employed income of over 30,000. And then in 2028 for those with combined income from property and self-employed business of 20,000. So it's being introduced gradually over the next few years.
Okay, so who does it apply to?
It applies to, as I've mentioned, this sort of self-employed and landlords who meet the income thresholds. So if you don't meet that, then you're not in, or if you don't have property or self-employment income, you're not in either.
Mm-hmm. Okay, and what are the quarterly updates? Does it mean I have to do a mini tax return every quarter?
No, not at all. So the quarterly updates will purely just be putting in some basic detail on your income and expenses each quarter. And the idea is, because it's digital, that you'll be almost uploading those daily anyway or weekly onto your system. So it'll just be a quarterly filing of the self-employment or property business, or both, if you've got both. And it won't include like your interest, your employment income, any dividends from share portfolios. That won't happen until you do the end of year declaration.
And when should I take action by?
That's a good question. So I would always say now. So if you haven't already, I would recommend that you file and complete your 2025 tax return as soon as possible. Get that information into your accountant and then get that document filed. And the reason for that is that will help show whether or not you are going to be in Making Tax Digital or whether you don't meet the criteria currently. And the sooner you do that, the sooner you can start having conversations with your advisor. So contact your advisor, start discussing with them what's involved for you, what type of service will you need, what support will you need, and start having discussions on software if you don't already use the software.
And what happens if I leave it just before the deadline?
If you leave it just before the deadline, and I would put out a call, please don't, anybody, but if you leave it just before the deadline, it's quite possible that you won't be ready in time. As agents, we have to register each individual client. We can't do a bulk upload, and we can't do an upload in advance, just in case you might be asking us to help you out. So my recommendation is don't leave it to the last minute. HMRC systems might go down as well. This is very new, and everyone's going to be registering that needs to. So yeah, take steps early.
Mm-hmm. What happens if I don't do that?
If you don't do that, then you're likely to get penalties. Which is not a good place to be with HMRC. So yeah, so I wouldn't recommend that.
Are there any exemptions from MTD?
Yes, there are. So we have some automatic exemptions, and we also have some exemptions that you need to apply for. So in terms of automatic, we have things like foster carers, people without national insurance numbers. So if you haven't got a national insurance number by the 31st of January before the April then you don't have to do it. And then in terms of applying for them, if you are digitally compromised, that might be because of age or disability or for some other reason, for example, you've got no internet, then you can apply for an exemption. Or if you are of a religious belief where that belief doesn't allow you to actually communicate digitally and file things electronically. So you can apply for an exemption for that as well. And then there are some scenarios, for example, where HMRC have said where they cannot allow, their systems can't allow you to file digitally, you'll be exempt as well. So that might be, they haven't put the detail of that yet, but that might be people who are politically exposed, for example, because they file paper tax returns at the moment. So there are a number of exemptions, that's just a few. So it's worth looking at if you think you might want to apply for one of those.
So how will HMRC decide if you are included in MTD? Will I be registered automatically?
So in terms of deciding, HMRC have initially looked at the tax returns that people filed in April 2020, for year ended April 2024, so that the last tax returns you would have filed before January. So they've looked at those and the income that's been disclosed on that. And from that, they've sent out letters, or currently sending out letters to individuals who they think may be in Making Tax Digital, sort of prompting them to get ready. What will then happen is you'll file your tax return for the year ended April 2025, and HMRC will look at those figures following January 2026, which is the deadline for filing that tax return. And again, we'll send letters out to individuals saying that they believe you should be registering for Making Tax Digital. If you don't get a letter, that does not mean you don't have to register if you meet the criteria. So letters go astray, HMRC systems aren't faultless. So if you should be in, you need to register regardless of whether HMRC contact you. In terms of if it's automatic, the answer to that is no. So everybody has to go in and register themselves, or their agent registers you individually. So in terms of ourselves, whilst we may have many clients that need to register, we can't bulk register them. We have to go on and do each individual client, which is a task in itself.
What does registering involve? What software is available?
There are lots of softwares out there. So we use Xero, but there are other accounting softwares out there, and there's probably going to be more coming onto market. In terms of registering, you need to get yourself set up on software and make sure that that software is compatible for Making Tax Digital. Not all software will fulfill the requirements, so people need to be aware of that. So don't necessarily just go out there and get the cheapest. Make sure it's one that actually it does what it needs to do, and talk to your accountant. As I say, you might need some training on the software if you've not used it before, so we need to get that in place. And we will, once it goes live, we'll need to register with HMRC to make sure that you've got a Making Tax Digital account set up, ready to go.
What's the easiest way of transitioning?
The easiest way of transitioning is actually entering early voluntarily. So take part in a trial if you can. So we are having clients at the moment going through the trial. That benefits the client in that you are set up early and you are ready to go. So when April arrives, you'll be past all those teething problems that might arise. It helps us as well that we get to learn the system and have live trials in using it and seeing how it works with HMRC. It helps HMRC because they'll get feedback, and the software providers will get feedback as well. So take part in those trials. It also has the benefit potentially of saving some of the costs, because there are costs to obviously moving from paper potentially to software, having training on the software, and a lot of firms, including ourselves, are discounting those costs for those that are willing to go through the trial process with us. So it's worth having a discussion with your advisors on that.
So I've always had paper records. How do I switch from paper to digital?
Okay, so it will be with the help probably of your advisor. So I would recommend that you get in touch with them. We need to get the software, so getting the software ready and up to date would be good. And also the information you're going to need, so you'll need the dates, sort of the type of income and expense that you've got, and the amount is the information that you'll need to put on the system. It is possible, if you use spreadsheets, to have bridging software, sort of use that spreadsheet to make the quarter filings. We would not recommend that. We'd recommend just embracing it and going digital. That bridging software is unlikely to be there forever, and therefore it's not recommended. The idea is that we go digital, and as I say, it's not as scary as it seems. And actually, once you start doing it, you'll probably find it's a lot less work than having to produce a spreadsheet or gather all your receipts at the end of a year.
So will this cost me?
Yes, that there will be costs. So obviously it's new. And there's more work to be involved. So, for example, if you've got self-employment and property, you could be filing 8 quarterly returns, 4 for the self-employment, 4 for the property, and then an end-of-year declaration. So that's 9 filings instead of 1 self-assessment tax return. So there is more work involved there. Also, if you don't use software currently, there is a software cost, which you will pay, and that will be an ongoing cost. And then there's setup and potentially training costs. As I say, some of those costs can be mitigated if you are able to be involved in a trial, but there will be extra costs there. You won't suddenly go from paying for a self-assessment tax return, and then if you've got 9 filings to do instead of 1, paying 9 times the amount. We don't perceive that happening at all. Just because the way it will be done, it should be quite efficient, and therefore, yes, there will be an increased cost. How much that will be will depend on each client and the help they need. Unfortunately, it's not a set amount. Yes, some people will do it a lot cheaper than others, but as I say, it's about looking for value for money rather than the cheapest option. What help and support is there for you in terms of getting things done? So look at the bigger picture. Again, talk to your accountant. I would also say that this is going to be a learning process for advisors as well as the clients. So it's new to all of us. So we don't know at the moment how much additional work is going to be involved. We just know there will be additional work. Hence, we're asking people not to leave things to the last minute. But we don't know the amount of that. So it's likely that fees for a year or so, might fluctuate a little bit whilst we find actually what is the level and what is a fair level for the client.
Will I incur a one-off cost or will it be ongoing?
It'll probably be a mixture of both. So one-off costs are likely to be maybe the initial software setup and the training for it, and then the ongoing costs would be your compliance costs of doing the update and the end of year, which is similar to filing a self-assessment tax return. That has an ongoing cost, and you'll have the ongoing costs of software. In terms of software, those costs are usually quite small. Some of the software out there is very good value for money at the moment. As I say, we're using Xero, and they're very reasonably priced.
Can I offset this cost against my business expenses?
Yes, you should be able to offset some of it against your business expenses in the same way as now the cost of preparing sort of an income expenditure account for the property or your self-employment can be offset against that income source. You should be able to offset some of this cost against that income source as well. So yes.
This all sounds painful. Are there any benefits to doing this?
Yes, surprisingly there are, and I think it sounds worse than it is, but change is always a little bit scary, but I would encourage everyone to try and embrace it. The benefits are really going to be that in terms of the businesses, you will have a a better picture of what's happening, so there'll be more financial information available. So rather than waiting till the end of the year and looking at how you're doing, you'll know how you're doing going along, which might help cash flow. You'll also have more touch points with your advisors, so you'll be liaising with them more frequently, which can only be a good thing, and will enable them to be more proactive in giving you more proactive advice, which actually might help you save tax and make the most of reliefs that are out there as you're going along. So it's very hard for us to give advice after an event at the end of a year, but if we're doing it as we go along, actually that can have huge benefit to you. So yes, there are benefits out there.
Some would say they're too old to use this whole new system. Do they still need to do this?
The answer is it depends. So there is an exemption if you're not able to do this. So some elderly people might not be able to do it, and therefore they can apply for an exemption. However, the general position is that they should be in making tax digital. And I would say if you use email, do banking online, have a smartphone, that actually you should be able to do it, and you probably won't have any problem in doing it. It's a lot simpler than probably it seems, and the software out there is very straightforward and easy to use, and I think people will find that actually it makes their life a lot easier than how they've historically done it.
What if my income drops below the threshold in the next year?
So if you're already in making tax digital and your income drops below the threshold, HMRC will want to see 3 years, consecutive years of you being below the thresholds to take you out of making tax digital. If you are not yet in making tax digital, so we haven't got there, and you know your income's going to decrease, you can contact HMRC and apply for an exemption and explain to them, and then they will make a decision on whether they want you in or out.
So do I still need to do a self-assessment tax return?
No. So making tax digital is effectively replacing self-assessment for those individuals that are within making tax digital. So they will move out of self-assessment and move into making tax digital. And the end of year declaration will basically replace the self-assessment tax return. Having said that, if you take part in a trial, then for the trial period, you will do an end of year declaration and a self-assessment tax return just for that trial period, just because it is a trial and it's not real. But no, self-assessment, once you're in making tax digital, self-assessment it's gone.
Will the due dates for paying tax change under MTD?
No, there's no plans currently for those dates to change. So tax will still be payable on the 31st of January following the end of the tax year. And then with payments on account due in January and July as per now. So no changes at all to tax payments.
What do I need to do right now?
Right now, I would say be prepared. Complete your year-end 25 tax return and start talking to your advisor. There should have been some communication from them, whether that's marketing emails, letters. Hopefully you've received something, and therefore start talking to them. What type of service are you going to want from them? What software is out there? Even if you don't take part in a trial, consider getting the software now and start putting your records on that software, just so you can get used to using it. So I think preparation is the thing I would say is key.
And is there anything else that people should know?
Only that it's never too soon to start preparing is what I would say. So if they get out there and talk to their advisors, then they'll be in a very good position. Don't leave it, please don't leave it to the last minute